So moving on to our usual trading tip of the week. So I've based this around the fact that it is Thanksgiving in the US this week. So, when there are holidays, especially in the US, with Thanksgiving or just with any major holiday, a lot of Americans, if it happens towards the end of the week or it's on a Monday, they take long weekends. Now, that means that the market volume drops off. However, as I mentioned earlier, that can actually lead to increased volatility as there's less resistance. So when you're trading, if you're trading, higher volatility, reduce the size of your trade. This allows you to have a wider stop loss, but without increasing the potential overall loss. So you're reducing your size down, which allows you to have a wider stop loss, but you must reduce your size to compensate for that wider stop loss, so that you don't increase that overall potential loss. So just remember that. Okay, now we're going to move on to technical analysis for this week. So just a reminder, so on the right hand column, on the axis, black numbers, support resistance levels, they're trend lines. Brown numbers would be breakout levels. Claret numbers, they're sort of levels I've identified. They could be just where I think that there's support or resistance, and it can be based on 2 or 3 tops or bottoms, or just what I call traffic where there's been a lot of activity in the past when I've looked. Pivot point colors are down there as well, so you can just take a note of them. I think there's only 1 or 2 charts with pivot points this week. There isn't any with Fibonacci, but the Fibonacci colors are there just as a reminder every week. Okay, so moving on to the Dow. Stocks had a very mixed week, reacting to data. The Dow's probably performed the best of all, though. I mean, that actually got up to test the old April-May resistance earlier this year, when it had that big spike in August as well, failed there dramatically, came all the way down to make those October lows, and then it's picked up again, and it just got really, really close to testing that same level again, which was a great selling opportunity. So I've got resistance pretty much at that level, which is 34.042 on the Dow. Support at 33.327 and 31.728. So that's based on the daily. And then when we move on to the 30-minute, so on the 30-minute, I've got resistance at 33.839 and 33.774, and I've got support at 33.616 and 33.469. It's possible they may range this week while people sort of just work out what's going on, and of course, as I keep saying, towards the end of the week, it's Thanksgiving, so it will reduce the volumes down. So on the S&P, I've put in the April-May resistance level at 43.04, but you can see how far away that is. The Dow's got up and touched that sort of April-May resistance level, but the others haven't got anywhere near it, to be honest with you. So got that resistance level still in at 43.04. I've also got resistance at 4,079. Support is at 37.49 and 35.88. Moving on to the 30-minute, I've got resistance at 4,015, 3,994 and 39.73. Support at 39.53 and 39.47. So, potentially there's going to be a breakout there Monday or Tuesday. Moving on to Nasdaq, tech stocks still struggling, big staff layoffs as well in that sector. So looking at the daily, I've got resistance at 12,170 and 12,158 with support at 10,797. Just remember, you can always take pictures of these or screenshots just to sort of hold them for the week, especially Monday. You know, I record a lot of this sort of Sunday in preparation of Monday, so we can get it out to you as early as possible. Okay, so looking at the 30-minute on Nasdaq, I see resistance at 11,841, 11,818, and 11,751, with support at 11,666 and also at 11,605. So a very slight uptrend there. But again, you know, tech stocks are under a lot of pressure. Okay, so we're moving on to the Russell. Just remember, the Russell is those smaller mid-cap stocks, very sensitive to consumer demand. You know, the big companies have got so much cash in the bank, it doesn't impact them so quickly, or they don't notice it so quickly. So it's, you know, it's not going to put them out of business so quickly. But the smaller mid-caps are much more sensitive to whether we're purchasing or not and how we're doing that. So on the daily, I've got resistance at 1924 and support at 1758, and it's sort of pretty much in between that at the moment. So wide prices. Zooming in a little bit on the daily, so I've got resistance at 1866 with support at 1844 and 1822 as well. Looking at a couple of currencies, so here's the pound against the dollar. So Friday wasn't such a bad day. It sort of held in quite well on the pivot points, which you'll see. Of course, you know, the USD has been weakening. Dixie, which is again just a reminder of the dollar index, sort of broke the 106 level after being up at 111. So it's more of a weakness of the dollar that we're seeing with expectations that the Fed are going to reduce their rate increases. But for me, if the Fed's reducing their rate increases, so is everybody else. So what difference does that make? The Fed's still going to be the strongest for longest. Okay, so sorry, I'm not sure I gave you the levels on the daily, but if in case I didn't, it was 1.2030 as resistance and 119.65 and support at 114.56. On the 30-minute, which we're on now, we've got resistance at 119.49 and support at 118.82 and 117.72. Sorry about that on the daily. I got a little bit carried away talking about cable. For me, just, you know, I just think the dollar's, you know, again, just remember this is just my personal view. I think the dollars should strengthen again soon. They've still got the strongest economy, and it's going to stay like that. Just look at the trillions they pumped in over COVID. And moving on to the euro against the dollar. So I've got resistance on the daily at 106.75 and support at 1.0331. And again, you know, the euro didn't hold up too well on Friday, as you can see from that. So I've got resistance at 104.29 and support at 102.66. But at least it's back over the dollar again now, which is obviously good for the euro. And again, you know, just keep an eye on the weather. So if the weather starts to get really, really cold very quickly, for me, that's going to be an impact on the euro. You know, if colder weather, for me, I'm going to be looking to sell the euro because obviously that is an inflationary pressure again coming back. At the moment, you know, the Europe areas managed to sort of keep their gas supplies up, get loads of stocks in because the weather's been sort of quite warmish, which has been you know, a godsend really. How long that's going to last though, again, you know, when you look, New York's got 6 foot of snow. Okay, you know, we're not anywhere near New York, but weather can change so quickly, and let's see what happens. So Bitcoin, Yep, after sort of had that massive sell-off after the FTX crash, that exchange, it was about the fourth largest, so you can't blame it. But it's consolidated this week, and you can see that pretty much between 15 and 17,500 dollars. Now resistance I've got at 18,555. And I've got support on the daily at 15,180. On the 30-minute, I've got resistance at 16,685, with support levels at 16,481, 16,397, and then 16,140. Moving on to the Bitcoin Nasdaq comparison that I leave in there, this correlation. And as we can see from that, it just seems to be broken at the moment. It was always a very loose correlation as such. But you've got Bitcoin that's consolidating, and you've got the stocks that are actually being erratic, which seems so strange when you look at sort of previous history. It was the other way around. Again, it just highlights how things can change, especially in the financial markets. Okay, moving on to gold. So on the daily, we've got resistance at 1670. We've got support at 1621 still. And then on the 30-minute, I've got resistance at 1771, 1765 and 1754, with support at 1750. So you can expect one or a couple of them to get broken this week quite easily. Gold's been quite volatile. Okay, last but not least is WTI. As you can see, Thursday, Friday, big sell-off, but overall on the week, with these demand outs creeping into the market, and of course, it's possible that the US could try and release more strategic reserves to help push the price lower, or they could actually come in now it's got cheaper to replace those stocks. Who knows? Or they might wait till it gets possibly back into the 60s before they start to replace their stocks. But what they won't want to do, especially with this cold weather now creeping in, as I keep mentioning with New York, 6 foot of snow, that what they won't want to do is have all these stocks too low, these reserves too low. It could cause them problems. Of course, they want the lower prices, but are they going to be able to get them to be able to replace those stocks, or will they need to have to come in at higher levels to do that? Also, price cap by the EU, it's being discussed. Again, that could put some pressure on oil. On the week, it lost $12 at one stage. Just in 2 days, Thursday and Friday, it was 85 down to 78. So again, we can expect to see some more volatility there. On the 30-minute, I've got resistance. Again, I'm not sure I gave you the support and resistance level, so just talking too much. But on the daily, 89.75 is resistance. On the daily, support is 77.26. On the 30-minute that we've got in front of us, resistance is 84.79 and 82.19, with support at 79.92 and 78.15. So that ends the analysis for this week. As usual, just a little bit of a reminder about us as a company, what we do. We provide these every week to help prepare you for the week ahead. I hope you enjoy these. We also put out a daily newsletter which provides fresh chart levels, fresh pivot points every day, plus global news, plus my views. And then in the way of helping you to improve, we do one-day workshops just to help you with any areas that you'd like to improve on. We do a 1 week intensive course in case you want to get more of an understanding of sort of the fundamentals as well as the technicals, the risk management, etc., etc. And then, of course, you know, if you're really serious about trading, you want to become a pro trader, we do our masterclass. That's 4 weeks of covering financial and commodity markets. You don't have to take all those 4 weeks at once, though. You can split them up, spread them out over a year, no problem. Gives you a chance to practice in between, which really accelerates your learning process. You can look at our calendar for that. Then we do trader mentoring, consulting. We provide lots of educational content to individual traders, exchanges, to brokers. If you're interested in those challenges where you get sort of like a funded account, then contact us and we will give you some more details on who we think are the best ones for that, that we've partnered up with. One of them I would say is Nordic Funder, so take a look at them, or you can contact me for more information. You can contact us at info@symaxfintech.com and my email if you've got any trading questions you'd like to direct to me, happy to sort of respond. chris.tubby@symax-int.com. So have an amazing week, be lucky, and look forward to catching up with you again next week. Take care. Bye.